Alright, guys, I'm going to talk today about a Euro USD trading idea for today, that is 23rd November. Um, it should be obviously 2023. Alright, let's look at the data released today at the beginning of European session. French PMIs slightly less than forecast, German PMIs slightly more than forecast, and also revision of German PMIs uh, were slightly more than the previous actual. So it was slightly positive, it was slightly negative, and then came Eurozone PMIs. So besides these two separate releases from these two countries, there were Eurozone PMIs. And when I say PMIs, I mean two PMIs, manufacturing PMIs and services PMIs of France, and the same PMIs of Germany, and the same two PMIs from the overall Eurozone. And this was also slightly positive. Before this PMI, if we go back yesterday and if we see uh, first few hours of US session, we saw better than forecast unemployment claims, which came something around 209k. It was expected to be more than 220k. So it was a positive news from the US yesterday. And then there was a revised University of Michigan consumer sentiment. It also was revised positively, which actually sent Euro USD to the downside yesterday, which you can see here in the chart. I'm talking about this one. So this was the move. Sorry. All right. So I'm talking about this move. This move to the downside. But Euro USD recovered almost 40% of losses during late US session and early Asian session today. This was the recovery to the upside. And this is 4 hour time frame, and I have taken a sell position. So I will tell you why I'm thinking that market will go down. But before that, let's come back today. So overall result of these PMIs is slightly positive. However, if we look at the price action is not bullish. For example, we go to 1 hour time frame to see what happened in the first hour of European session when all those PMIs were released in the first hour. We got this candle pattern, and this is a spinning top candle pattern, and you know that spinning top candle pattern is an indication that the market may take a pause from whatever kind of movement it was doing. So this was the fall in early US session yesterday. Then this was the rise, or you can say recovery of the fall in late US session and early Asian session, like I said. But then it made a spinning top, which suggests that the market may pause and it may change the direction. So I took my sell position because I am targeting this line. If I will go back to 1 hour time frame to show you what this line is. You can see. So let's go to the 4 hour. You can see that market has been moving to upside in a uptrending channel with this as a upper border and this as the lower border. And there is high probability that market, after accelerating above this rising channel, can come back at least to the upper border of the channel, or even can come inside and can start trading inside the channel. So that is more bearish scenario if it comes inside the channel, but there is high probability that it will at least come to this point. So if we talk about the reward, this is our reward from this point. This is where I took the position. So this is something around 780 points or 78 pips, and this is where we will exit in loss. So our risk is something around 600 points, that is 60 pips, so it is justified. Now let's talk about what is my exit plan. My exit plan here is uh, eh, 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 my exit plan consists of two positions here. Probably I will take another position, or probably I will not need to take another position. So I have divided my risk into two positions. I have taken one position with this 78 pips reward, and if market will come down, I will book my profit and I will exit. Or else if market goes down, so there is chances that market can still come down after going a few pips to the upside. So I will take my second position. If market doesn't closes a 4-hour candle above this high, let's say market goes to the upside, and then from this area or this area, before going above this point, if it again makes any bearish candle pattern on 1 hour, not on 4 hour, I'm talking now on the 4 hour, but I will see the bearish sign, I will look for the bearish sign on 1 hour. So if it will make any bearish uh, candle pattern or something like that, I will again enter another sell position. Then I'll have two sell position and I will exit both of them at this. So even if market will stay bullish, there is high chances that even if it will if it will not come inside the previous channel, it may make a new channel which will be like this. So coming to the midpoint will with the uh, I mean, at least it will come to the, even if it is not coming to this, this line, at least it will come to the midpoint of this new channel, which probably which it probably can form or cannot form. But if it forms, so with two positions, I will still exit here at the mid of the uh, this channel, and then I will still be ending in the profit. However, if market becomes totally very strongly bullish and it doesn't even come to this point, it simply goes to the upside and breaks above this and a 4-hour candle closes above this, then I will take losses in the both positions. My bearish idea is also supported by this divergence, which you can see: high, lower high, high, higher high. So when an oscillator makes lower high, when price makes higher high, it shows that the price is slowing down and there is chance of downward movement. So this is all about today's trading plan. Thank you for watching.